Nasdaq Nate here. It's Monday the 3rd of November, and in today's video I'm going to show you a trade that I did not take. It was a whopping 1 to 6 risk to reward. That means it was 6%, which is $3,000 on my 50k funded account. I didn't take the trade, but I'll show you exactly what I saw. So here we're on the 15-minute time frame on Nasdaq, and as you can see here, we've got this order block from previous day. So that's from Friday last week. As you can see, we've got some market gap over the weekend, and we've got Asia highlighted in yellow, London session in blue, and then we always highlight New York session in green. Now, as you can see, London has swept Asia's high, which is exactly what we want to see. Accumulation, manipulation, distribution downwards. So that's perfect. Everything was ticking all the boxes. And if we just scroll down, we'll go down to the lower time frames. So at 2:30 GMT time is when the Nasdaq opens. So this is when the New York session starts to pump in lots of volume, and it's where we want to get involved to make our profits. So all I did is I dropped down to the 1 minute time frame and highlighted any points of interest. So my key points of interest are sell side liquidity, buy side liquidity, any fair value gaps, whether that's bearish or bullish. So here you've got a displacement candle, which has mitigated that 50-minute order block. We've had a slight rejection, we've had a retest, and then we've had our sell-off at 2:30 GMT, which is the New York Open. Now, as you can see, if we look closer, we have got our 1, 2, 3 candle pin pattern that we look for. Now, this is a bullish 3-pin candle, and if you look closely, this bearish candle here actually closes below that fair value gap, which means it's now an inverse fair value gap. So we can start to look for sells. Also, the displacement candle has also been rejected. It hasn't held because we've had another candle that's closed slightly below it as well. So this would have been our prime entry to get involved in the sells, which would have been around 2:35, so 5 minutes thereafter the New York Open. And all we wanted to do was target the London lows. There was another fair value gap slightly below, there's resting liquidity below, and we do have that market gap from the weekend slightly below as well to target. So this is where I could have entered but didn't. And then if you just have a look, you can see price literally just tanked all the way from 2:30 till 3:30. So 60 minutes of complete sell-off. What I was hoping for was some form of spike up into these points of interest, so then I could get in. My analogy, what I kind of learned over the weekend was, if you're a surfer, you don't want to be waiting in the ocean, waiting for the waves, because you're more susceptible to risk, i.e. sharks, drowning, weathering, all the above. What you want to do is wait on the beach where it's nice and safe, see one wave, see a second wave, enter on the third wave. So after seeing, 1, 2 fair value gaps being blasted through and respected, I was hoping for a third entry. That wave never came, which is why I didn't enter the trade. So things to consider moving forwards. If time and price are presenting themselves, which they did on 3 time frames, 15 minute, 5 minute, 3 minute and 1 minute, just get involved. But at the end of the day, I've protected my capital. We haven't lost any money. We get to trade another day. The funded account is still intact. So if you've liked this video, please like it, favorite it if you've learned anything, and by all means, give me a comment and I will reply to every single one of you. Nasdaq Nate.